Good evening. This is Ken Long from Tortoise Capital Management with a market health check update for 19 January 2010. We are in bull quiet mode. You can see that we're testing the upper limits of this trading range of 110 to 115. If we break out from here, there's plenty of room to run. I expect there to be a buying urge tomorrow, what with the surprise victory in Massachusetts of the Republican. We've got a lot of upward potential here because ADX is only at about 14, and so there's plenty of room for that trend to continue to run. So we've made a nice leg up here after the sideways market of second half of November and December. Market is overbought right now. That's a concern. However, we've seen before that the market can remain overbought for long periods of time, so we're not really concerned about that. Volatility is still very low. All of that is very favorable. And so this is the potential of an explosive 8 to 10% move in SPY, which implies 10 to 20% potential gains in some of the smaller indexes and large caps. Taking a quick look at the signals, we can see the daily signal summary, bull quiet conditions, 10-day index at 97. You can see we're at the top end of that range. Alcoa in the max pain along with AT&T and Verizon, CAT as well, Caterpillar. So four old reliables that are potentially very good tomorrow. Pivot point at 114.6. See the slope of the 50-day moving average and the 20-day moving average are both very bullish. Volatility quiet, that's very favorable. What I like right here is this, the slope of the 30-day regression line you can see is back above the average, and it's been in kind of sideways here in the sideways range we've had for the last 2 to 3 months. That's looking very favorable. Volatility at the low end starting to hook up a little bit. I think we're going to see volatility tomorrow. In the summary of the daily setups, there's one washout pattern in PCS. It's a large cap stock, well, probably mid cap stock but it's in the S&P 500. It only trades around 6.5. There's a lot of other really good setups in the 551W and the Stealth and the triple screen that are very favorable. It's on my radar, and although washouts are my bread and butter, I think these signals here in the 551W are very compelling. You see there's a lot of large global indexes there, and so what that says is that the market is postured for very favorable action tomorrow. I'm also taking a very hard look at Alcoa, which is a triple screen candidate, but it's also a max pain candidate, and it's one of our old reliables, and so that's a very favorable target for me tomorrow. Taking a look at the daily tactical report, again, you can see Alcoa and AT&T postured at the oversold range. You can see the great number of large caps that are already overbought. Notably, Pfizer and Merck, I think, are in a good position tomorrow to benefit from the healthcare narrative that comes out of Massachusetts wins. Again, I like Verizon and Alcoa in the max pain. I like Verizon because it's a 10-day max pain, but it was one of the percent gainers today. So I think that has possibility for some really significant momentum tomorrow. Alcoa, just because it's an old reliable, 3-day and 10-day max pain, and a triple screen. I just think Alcoa is in good shape. It's found its bottom after that gap down sell-off from last week. I want to take a quick look at some shorter-term setups. Yesterday we had 3 signals in the overreaction system: ILF, EEM, and IGW, the semiconductor index. All of them fired. All were favorable. You can see here's ILF. We bought at the open. Potential up here at the purple line. There's plenty of room just to get up to 49 just to excuse me, to get to fair value. It's just coming out of oversold conditions here too. So room to run in ILF. The same basic pattern in EEM. That was the best firing signal, and so if there's momentum tomorrow, that one's going to go. We bought right at the opening, which was the low of the day, and 43.50 is the test of the swing high. That's already probably, I think the easy money's already been made, but we may see some more momentum in the overseas markets tomorrow as they try to front run SPY's strength. IGW, the semiconductors, there's still room to go on this one. You can see the trading range could test as high as up in around the 50. So there's if we see strength in technology, the semiconductors have actually been lagging tech. So if we see strength in the Nasdaq and QLD and QQQQ, IGW could rise in sympathy. So that's a pretty favorable one. This is the quick look at that washout pattern in PCS. Again, it's my third tier of targets tomorrow, but you can see the basic washout pattern. Be looking for an entry around 6.5, target around 8, so it's an easy 3-to-1. But again, I think the other larger indexes are much more favorable here, although it does seem to have found some stability after that harsh sell-off. Let's see. The last one I want to take a look at is AT&T. This was a 9-day down max pain candidate. We got 1 day of momentum today. It seems like a natural candidate if there's additional momentum, price above 26.2. And now you could pick a comfortable management stop at any one of those 3 solid red lines. And then that, depending on which ones you pick, you could find a 2-to-1 reward to risk ratio with a price target about 27 or 27.5, or as much as 28, and that's just in normal retracement levels inside AT&T. So that's actually a max pain, and it's also a 9-day down continuation pattern based on 1 day of momentum. So AT&T is on my short list for tomorrow as well. It was one of the percent gainers, as you recall, from the daily tactical. So there's some reason to believe that tomorrow's got some momentum follow through for AT&T. So that's a quick look at the market health check and an update on some tactical ideas for the market tomorrow. Good trading.